Ladies and gentlemen, good day and welcome to the Q4 and FY25 earnings conference call hosted by Filatex India Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star, then 0 on your touchtone phone. I now hand the conference over to Mr. Tanish Bansal from Share India Securities. Thank you and over to you, sir.
Thank you. Good afternoon, everyone. On behalf of Share India Securities, I would like to welcome all the participants for the Q4 and FY25 earnings conference call of Filatex India Limited. We are pleased to have with us the management team represented by Mr. Madhusudan Bagaria, Chairman and MD, Mr. Ashok Chauhan, Visionary Officer, Mr. Nitin Agarwal, Chief Financial Officer, and Mr. Vedansh Bagaria, Vice President of Corporate Strategy. We will now have opening remarks from Mr. Madhusudan Bagaria to give an overview on the company's performance. This will be followed by the question and answer. Thank you and over to you, Madhuji.
Thank you. Good afternoon. A warm welcome to all attendees of this FY25 conference call. Joining me today are Mr. Chauhan, Mr. Nitin Agarwal, and Mr. Vedansh Bagaria. I trust you have reviewed the investor presentations, which have been uploaded on both our website and the stock exchanges. Let me begin with a quick recap of our key performance indicators. On a quarter-on-quarter basis, operating profits remain nearly unchanged despite a slight decline in sales volume, indicating a marginal improvement in EBITDA margin. On overall basis, FY25 was another important year for Filatex, as the company continued to make steady progress across key metrics. With a focused strategy to enhance profitability compared to the previous year. For the full year FY25, the revenue was 4,252 crores, as against 4,286 crores in FY24. The sales quantity stood at 3,90,000, a slight drop from 4,01,000. Our EBITDA grew by 7.76% to rupees 257.71 crores, up from 239.16. PAT rose 21.6%, reaching 134.6 crores, up from 110.7 crores. In domestic market, competition remains intense and we anticipate gradual improvement. However, the export market for textile yarns continue to face pressure due to lower Chinese prices. High raw material costs makes us uncompetitive in export market. In fact, raw material price disparity is so high that suppliers from China find ways and means to dump yarn fabrics at low prices, thereby causing pressures on margins in the domestic industry. To address this, the government has imposed a minimum import price across most HS codes for fabric imports. Indian government must urgently ensure that MMF raw material prices are competitive enough to capture some of the China share in the US market. US tariff announcement has caused strong waves of uncertainty across many sectors, and textile in one wherein there could be a gain. At operation level, our capacity utilization is above 95%. We are continuously looking at ways and means to reduce our energy consumption as well as the cost. We have tied up with Torrent for a capacity of approximately 20 megawatt renewable energy at a landed cost of 4.75 per unit. Energy is our second biggest cost, first being raw material. This power supply agreement will be effective from January 2026. Upon getting this energy, our green energy content will be around 20 megawatt out of our total requirement of 36 megawatt. As this energy will be a cost lower than grid power cost, this will reduce our energy payouts by around 19 to 20 crores annually. We also operate a 30 megawatt captive power plant. With 20 megawatt when sourced from renewables, the utilization of our turbine capacity is expected to decline. To optimize the use of our boiler and turbine infrastructure, we are proposing a new model generating approximately 15 megawatt of electricity and extracting steam from the turbine for plants for external sales. This extracted steam can be supplied to several small companies in the surrounding area. The unique advantage of this scheme lies in its exceptionally low power generation cost. Additionally, the recipient companies benefit by purchasing steam at a price lower than their cost of self-generation. We have received strong interest and preliminary acceptance from nearby industries, many of whom are ready to sign MOUs. To implement this system, an investment of around 85 to 90 crores is required for the steam pipeline and infrastructure inside the plant. Our projected annual savings from this initiative are estimated to be around 60 crores annually. We plan to add additional yarn capacities at the Dahej plant, EOI capacity of 19,800 metric tons per annum, DTY capacity of 14,400 metric tons per annum. FDY capacity has been doubled from what was initially planned. FDY capacity addition will be now 28,800 metric tons per annum instead of 14,400. FDY market is gaining ground in domestic market. The capacity addition envisages a capital expenditure of around 235 crores. This additional capacity will be operational by August 2026 and will give it additional EBITDA of around 70 crores annually. Despite short-term challenges, the long-term outlook remains constructive, supported by strong fundamentals, proactive government policies. Corrective steps such as addressing the inverted duty structure of GST on polyester imports will provide further impetus to the domestic industry. On the raw material supply side, around 2.4 million tons of PTA capacity will be commissioned by calendar year 2025. These plants have been set up by Indian Oil and the other one is by GAIL. This will reduce dependence on imports which have uncertainties like shipping schedule, exchange rate fluctuations. Also, Reliance Industries is putting up a 3.2 million ton capacity plant for PTA, which is likely to be commissioned by mid of 2027. All these sectors are encouraging and will restore confidence in the future of PET fibers and filaments and boost domestic production. The global textile industry is undergoing a major transformation. It has been identified as one of the world's major polluters, with environmental degradation affecting rivers, groundwater, air, soil, biodiversity, and marine life. The industry is now transitioning from suggestive measures to regulatory enforcement. Environmental and social accountability is no longer optional but a prerequisite for global competitiveness. Consumers are increasingly demanding products made with environmental and ethical integrity. They expect fabric dyed with responsibility, garments stitched with sustainability, and products backed by traceability. We firmly believe this is the time for textile transformation. Our in-house research is going on. We are actively pursuing effective steps to set up our first textile-to-textile recycling plant, which can utilize polyester waste in all forms. We have developed and patented a molecular regeneration process for polyester textile recycling plant. Globally, many companies are developing technologies to enable commercially viable recycling, and we believe that although the path to sustainability in textile is challenging, it is undeniably the future. To mitigate environmental impact, adopting a circular economy model is imperative. This model addresses global challenges such as climate changes, biodiversity loss, and waste. For us, sustainability is not merely a compliance requirement, it is the foundation for future growth. It is a survival mantra for people, businesses, and the planet. Aligned with the vision, we have been conducted R&D in textile-to-textile recycling, enabling infinite recycling. A pilot plant is already operational, processing various pre-consumer textile waste such as garment and home linen. We wish to inform that we have started execution of a proposed recycling 26,250 tons per annum capacity plant. We are setting up this plant near our existing facility. This location has easy access to waste raw material supply as well as good infrastructure. Project engineering consultants have been appointed. Building construction has started and equipment ordering are being finalized. We expect to be in production by July 2026. Thank you.
Yes, sir. Should we begin the Q&A session?
Yeah.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, I'm audible, sir.
Yes, you are.
Okay, yeah. Thank you very much, sir, for this opportunity. So just first up, wanted to understand, I mean, we have said in the past as well in terms of EBITDA margins, we would like to see double-digit EBITDA margins. So by when we are targeting to reach double-digit EBITDA margins?
I think maybe in the second half of this financial year.
Okay. And when we say double-digit EBITDA margin, we exclude other income, or we are including it's including other income?
No, we exclude other income.
Exclude. So by second half, and what would be the trigger point to? I mean, because currently I think our EBITDA margin is close to 6 to 7%, right? So this 3%, 3.5% gap.
Normally, second half is better because of winter. The demand of fabric is higher.
Mm-hmm.
First quarter, there are a lot of shortage of labor and there's a lot of pressure.
Mm-hmm.
And also in the fourth quarter, I think one PTA plant will also start locally. So that will also give some savings in the form of raw material cost.
Okay.
And gradually the demand is increasing. No major capacity is coming in. Only one plant of Sanatan, which is expected to start somewhere in July, is coming in the north. There is no increase in the capacity.
Okay.
All that will lead to some increase in the margin. Already we are seeing some trickle happening from this month.
Okay, understood. So by second half, you're expecting this 6.6% margins to go up to 10% at least, I mean, by second half. Okay. And I mean, when did government introduce this minimum support price to protect the industry?
In the budget also they did it, and recently also one for 4 HS codes they have done it 3 days back, I think, 2 or 3 days back.
Okay. And
in the budget they did it for 9 HS code and 4 more they have done it 3 days back.
I understand. And in your opening remark, you did mention that demand in domestic market remains challenging, as well as export market prices also remain challenging, right? So how do we see that going forward? I mean, is demand improving? There is a gradual improvement we are seeing in the domestic market.
Yeah, there is a gradual improvement. There is a gradual improvement in the demand.
And what about the export market? How do you see?
The imports of fabrics have reduced drastically, which was being met by imports. Now the local producers are producing more fabrics to meet that demand. So the yarn demand has also increased.
Has seen a gradual improvement. And what about the export market?
Yarn export is a challenge because China, you can't compete with them. We are doing very small volume, but not big.
So how much? I mean, 5%
They get
of
raw
revenue?
material very cheap in their country. Almost more than 10% cheap they get. So it's very difficult to compete at that cost.
So what would be our revenue mix? I mean, 4-5%?
No,
Exports?
it's 1 or 2%. 2%.
1 to 2%. Understood. Fair enough. And regarding your recycling plant that you mentioned, we are expecting it to start by July 2026. I mean, more than a year from now, right? I mean, that's what so that's it.
That will take. We just started construction and ordering. It takes time.
Correct. So that will be margin accretive for us, right? Because that particular plant would have...
the margins there are good, although the size is not that big, but the margins are good. So once this plant is operational and is good, then we will multiply these kind of plants.
Okay. And but what is the revenue potential? I mean, 300 crores at 35-40% margin?
Around 300 crores.
Okay. And just my final query, I mean, because you mentioned that our capacity utilization is already running at 95%. So what would be the growth that we might be looking at? Because that's
what I said. No, we are expanding some capacity, which will be operational by August 26. We are in the process of ordering those machines. So then it will increase by another 12-13% the capacity.
Fair enough. 12-13%. So ideally that means that is coming in August 26. So ideally FY26 we might see muted growth, right?
Yeah. It will be similar quantity.
Similar. I mean, and
similar to FY25. FY26 will be similar one.
FY26 will be similar. And in terms of ASP, I mean, you expect ASP to be similar as compared to FY25 as well?
What is ASP?
Realization.
Realization, top line depends on the raw material prices. If the raw material prices are low, then the top line reduces a little, but the margins will remain what I have indicated.
Understood. Fair enough. Okay. That would be it from my side. All the way best to you. Thank you so much.
Thank you. The next question is from the line of Swayam Rana Bhatt from Pinpoint X Capital. Please go ahead.
Yeah. So my question is about, I wanted to know the effect of minimum import prices. Are we witnessing any positive impact on ground regarding this for a domestic player? And if yes, can you please explain it in more detail to understand how things are really playing out?
There was an import of a lot of knitted fabric from China at very low prices, which are below the cost prices. So there the government has put $3.50 as the minimum price. So after that, there is a good demand in the knitted fabrics in India. And that's why the demand for yarn is going up.
Okay, sir. Got it. That's it from my side.
Thank you. The next question is from the line of Bansat Pandey, an individual investor. Please go ahead.
Good afternoon, sir. Hello?
Yeah, good afternoon.
Yeah. Sir, with all these expansion programs going on, where do you see a EBITDA margin, EBITDA in real terms in FY27, sir?
Yeah, as an absolute number, I see at least growing by...
As an absolute number.
You want a percentage?
No, sir. I would prefer an absolute number.
Absolute number, we expect in the full year to be more than 30% more than the last.
FY27, sir, I'm talking about.
Yeah.
Should we expect about 450 crores or so?
30% more than FY26.
Okay. And what would be FY26 approximately, in your opinion?
You know the FY25 number. You can add 30% and you'll get the number. Why you ask me to?
Okay. So FY26 will be 30% more than FY25.
Yeah, that's what I'm saying.
And FY27 will be again 30% more.
Yeah, because we'll be adding more capacity and then the markets will be very good. So it
Thank
could be
you
much
very
more
much,
because we'll get additional capacity, we'll get savings on the power also.
Exactly.
So it could be much
Thank
more
you.
than 30%.
Thank you so much, sir. Another question, sir, the 68 crores of traded goods, we've never traded goods in such a huge number earlier. So any reason for that, sir?
Basically, gas, which we had to take and sell from IFC.
Okay.
If not,
Thank you so much. Hello.
Thank you. The next question is from the line of Aditya from Securities Investment Management. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. Sir, I am a little new to the industry, so pardon me if my questions are a little basic. So this synthetic yarn industry, so if you could just help us understand what are the demand and supply dynamics in domestic market. So what would be the demand in metric tons and what would be the current supply, and how much of it is catered by domestic players versus imports? If you could just give some understanding on that.
more or less it is balanced. The total production of polyester filament yarn is something upward of 4.5 million tons annually. And so is the demand. There is some imports of yarn and there are some exports also. So they balance out.
So imports would be how much?
So the exports would be roughly around 400 to 500,000 tons. And similarly, imports are also close to these numbers.
Understood. And now, sir, if I have to understand export dynamics,
Maybe slightly lower. Imports are slightly lower. I mean, if this is 400, 500, that will be like 250, 300, something like that.
Understood, sir. And now, sir, if I have to understand the export markets, so I believe China would be the largest player. So now with, US imposing tariffs on China, is the cost differential between Indian players and Chinese players has reduced? Are we, can we get advantage because of these tariffs going forward?
US doesn't import yarn that much, so it doesn't affect so much. US is importing finished garments mostly or fabrics. So yarn side, the exports from China are to the countries where fabric is being made, like Brazil, Egypt, Turkey, Bangladesh, Vietnam. These are some of the major companies, even Pakistan.
Understood. And now
we are not affected by tariffs on the yarn side so much.
Got it, sir. Understood, sir. Sir, now if I have to understand the cost differential between us and the Chinese players, what would be the approximate cost difference advantage that they would have over an Indian player like us?
They have their raw material costs. Our product is today around $1, $1.10 export price. And they have an advantage of 10 cents in the raw material. So 10% on the finished cost, they have the advantage.
Understood. And that is purely because PTA is imported in India, which they have a local source over there.
Mainly because of PTA, which is short supply in India, and they have abundance of PTA, rather they export a lot of PTA. So their cost is, we have to pay a price which includes transfer to the port, freights, clearance charges, everything. So all that comes to around $100. That is what we pay extra over and above what the local in China gets the PTA.
Got it. And now, sir, if I have to understand, you have mentioned that there is sustainability initiatives going on around the world. So now, if I have to understand how do we, color our fabric? So is it using conventional methods, using dyes, or we use a dope dyeing method?
We make yarns only. We don't make fabrics. So we make dope dyed yarns. But people who make fabrics do both. They use dope dyed yarn, they color the fabrics also, they use dyed yarn also, everything.
Got it, sir. Sir, thank you, sir, for answering your questions.
Thank you.
Thank you. The next question is from the line of Reed Jain from First Water. Please go ahead.
Yeah, good afternoon, sir. My question is regarding the recycling plant. So, how are we going to source the waste material for the recycling plant? Is it sufficiently available, or we need to set up the
Yeah, it is
collection
sufficiently available around Surat and area where people use polyester yarn to make fabrics and process houses. So they is sufficiently available there.
Okay, but that is for the one plant. But when we expand more, what are
Then
the...
we'll expand, then we'll also develop the technology where we can use the used fabric. So then there'll be no problem of availability.
Okay, so going forward, you see
The
no...
problem is just sorting of the fabric. So we will develop that technology to sort out the fabric. We can use fabrics which have cotton or rayon inlay with polyester, but we cannot use fabrics which have nylon or spandex. 1%, 2% is okay, but nothing more than that. But these three constitutes more than 95% of the fabrics. So there should not be any challenge in getting the raw material for the future plants.
Got it. And are we in talk with any of the clients for the recycling material to be supplied?
We are talking to some buyers. Directly they will not buy, but they make us like a nominated supplier to the people who are making fabrics and garments for them. So we are in talk with some brands.
Got it. And one more thing, there is one company called Amber Cycle. It has a tie-up with Zara. So how are we positioned against them? I mean, is our
We are also
cost
working
structure
on this.
lower
We
than?
have also not come out with a commercial production as of yet. So they have tied with some company in Taiwan, I think. FMC, Formos, I think. So once their product comes, then only I'll be able to comment on that.
Okay, got it. And one more question regarding the steam power project. It is saying that on the 85 crores of capex, we are going to save 60 crores of cost. So just wanted to understand what is the life of this project? Are we going to incur again and again, or 85 CR is just one-time cost?
No, this is a one-time cost. Then there is a maintenance cost of 1.5%-2% of the capex. That's all. And the life of these pipelines and everything will be more than 15 years.
Okay. Got it, sir. Yeah, thank you. That's it from my side.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Sir, thank you for the opportunity. Sir, if I just do a back of the envelope calculation for your recycling project, sir, it's coming out to be $1.3 to $1.4 that we'll be charging to our customers. So, is there a market for a yarn that is similar polyester yarn but at a higher rate because it is recycled, or
recycled yarns are being sold right now also at a higher price than the virgin. The price difference is roughly 35-40 rupees than the virgin.
35-40% higher than normal yarn, right?
Yeah.
And sir, what would be the margin potential for this project currently, and as we scale, where do we see this margin going?
We should have a bit of anything upward of 30%.
30%. Okay, got it. And sir, what would it? So we have highlighted that due to this minimum import price, the fabric manufacturing is going in India. So what would be the other triggers for realizations to go up, or at least our margins to go up, other than the cost saving initiatives that we have done?
See, one is the power saving which we'll have. Then we are adding capacity. The third is the demand side will increase, so the margins will increase in India. These are the main reasons. Demand of the yarn will increase. No? There are a lot of PLI schemes on the government. Those plants will also be operative. So we feel that the demand of the yarn will be much more than what it is today going forward. Just a trigger of 3-4% extra demand can change the whole game in commodities.
Okay, got it. So are we eligible for some kind of PLIs for our new expansion that we are doing of
We are not
28,000? Okay, got it. So thank you so much and all the best.
Thank you. The next question is from the line of Ritika Dua from Bandhan AMC. Please go ahead.
Yeah, so thank you. So just some basics. Firstly, what is our capacity today?
Our capacity today is roughly around 4 lakh tons annually.
And that you are saying that would be increasing by 10 to 15% next year?
12-13%. We'll be increasing roughly by 48,000-49,000 tons.
Okay. And a similar run rate maybe in 27?
Yeah.
Okay. And obviously because so we are not really obviously looking out of the current geography that we are in. So we are just expanding in the same geography that we are in today, or other state we are in today.
Yeah. We are expanding in this, and the new which we said recycling which we are doing, that's a new venture in a 100% subsidiary of Filatex. So that is the new thing which we'll be doing, and in future once that is operational, we would like to grow in that because that will be unique to us. That's our own technology, and that is what the world is demanding these days.
And sir, have we shared the sorry, or if you already shared, if you can just again share the number on the capex for that new facility?
See, 235 is for the yarn manufacturing, and around 300 is for the recycling.
Sure. So okay, so that's the two numbers. And sir, generally on the
85 is for the steam, and 24 for green power from Torrent.
Sorry, sir, I couldn't hear that. If you could repeat.
85 crores for the steam project, and around 24 crores is for the Torrent power which we are taking, which will be operational from January 2020.
Okay. I think I'll come back in the queue, sir. Thank you. Yeah.
Thank you. The next question is from the line of Shasha Porwal, an individual investor. Please go ahead.
Hi, good afternoon, sir. My question was, how has your product mix evolved over the past financial year, and are you seeing any sustained demand shift towards any particular category?
Sorry, I couldn't get you properly.
So my question is, how has your product mix evolved over the past financial year, and are you seeing any sustained demand shift towards any particular category going forward?
Are you talking about the production and the demand?
Yes.
Yeah, so production, I mentioned that we have capacity utilization above 95%, which is virtually full capacity utilization, barring some technical glitches in the year. And the demand is also good because we've been able to solve whatever we have produced. It's only the margins which are under pressure because the mismatch of demand and supply slightly is there. And also crude prices have been falling for last 3-4 months. So that also creates a pressure on the sales because prices are going down, so the customer is not buying freely. So once the crude prices like they have stabilized now, so the margins have started increasing.
Right. Okay, thank you so much.
Thank you. The next question is from the line of Charvin, an individual investor. Please go ahead.
Yes, thank you for the opportunity. So my question was that do you face any challenges from the e-commerce platforms with respect to margin since they all sell at a lower margin?
No, we have no e-commerce is not a threat to us at all. Our products are not sold or traded on e-commerce.
Okay, thank you so much. That's it from me.
The next question is from the line of Raj from Arjav Partners. Please go ahead.
Hello, am I audible?
Yes, sir, you are.
Sir, overall, we are doing an expansion of around 650 crores, right? So how are we going to fund it?
The recycle project, we are taking a term loan of 200 crores and 100 crores will be infused as equity from the parent company. And the 235 crores, we will be taking a ECB of around 125-26 crores. Balance will be internal accrual. And rest of the other two, it will be all under internal accruals.
All right. And sir, I just skipped a point. Earlier on the call, you said you are expecting 30% jump in EBITDA in FY26 and in FY27. Am I right?
No. 30% I said for the recycle project, when it is on stream. Otherwise, for Filatex, I said first quarter will be slightly better than what we have achieved. And second half of this year, we should have around 10% EBITDA.
Sorry? Second half of this year would
in
be?
the second half of this financial year. And first half will be slightly better than, maybe 150-200 basis point better than last year.
All right. And sir, for
overall,
the 250 tons?
30% increase in the EBITDA. If you see as absolute number, last year we did around 257. So 30% around over and above that we should do year as a whole in this year.
In FY26. All right. Overall in FY26, all right. And sir, in FY27, you are expecting another 30% improvement in EBITDA over FY26, right? Due to all the expansions coming on stream. Maybe more. All right.
Because we are adding capacity, we are also will be having power also. All these projects which we are doing will be on stream, so we could have much better than 30%.
All right. I think in FY26, sales growth would be flattish, right? And in FY27, we will see
there will not be much change in the top line.
Much change in top line in FY26. All right. So the change will see in FY27 also.
Yeah. FY27 definitely top line will change.
All right. Okay. Thank you. Bye.
Thank you. The next question is from the line of Neeraj from White Pine Investments. Please go ahead.
Thank you. I just wanted to know on the capex of polyester side, is it back-ended or front-ended? I mean, the capex when will it complete totally?
It's mostly back-ended. In the later half of you just do ordering, and then the second half of the time, like from main capex will happen from next financial year.
And your capacity of the debottlenecking that you said of 200 crores, you will be adding 20% capacity on the yarn side.
Around 13% capacity, 235 crores.
Right, 13. 235 crores, got it. So then, if the margins improve because of some demand improvement, so there's a 13% jump because of that, and the remaining is because of the improvement in the industry scenario. Am I right?
Right.
So, but one more thing, do you see this government reducing the import duty for polyester, because that has been the biggest thorn in the entire India garmenting side? So any thoughts on that?
Reducing polyester duty on?
Import duties on polyester and the BIS norms.
Polyester means what? Polyester is very big.
Yarn.
No, it can be yarn, fabric, garment.
So polyester yarn. Yarn or the raw
It is
materials
only
of that.
5% duty what they'll reduce.
The raw material for that, the BIS, does it create a
5% duty? So we are asking the government to please make our duty 7.5, so we have some protection. Because there are a lot of taxes which we don't get. For that, road tax was introduced. So we say that when you recognize there are certain taxes which are not available to a local manufacturer against the imports. So there should be some safeguard.
Right. And is there a BIS norm in the raw material for the polyester that you manufacture?
Raw material also, finished goods also. There are 3 finished goods. PT and MEG is the raw material. They are both in the BIS. Then finished is POY, DTY, FTY. So FTY and POY are under BIS. DTY is yet to come.
Okay. So 2 questions related to this. Do you see the BIS norms being relaxed for the raw materials? And do you see the BIS norms to be implemented for DTY?
So they are already implemented. This is not a problem of norms. It is that you can't import from China because government doesn't issue BIS certificate to Chinese. Norms are not a problem for anything.
Okay. So it's only the raw material difference in the import duties is what is the issue right now in the industry.
Yeah.
Oh, okay. Okay, great. Thank you, sir.
The next question is from the line of Rishi Solanki from Green Curve Securities. Please go ahead.
Sir, given the high volatility in the raw material prices, how do you mitigate that risk? Do you hedge, work on long-term contracts? That would be my first question. And so second question is in reference with Ecosys project. Are there any plans to license this technology? And how are you planning to compete with global players like Loop Industries and Reliance, who also offer recycled polyester?
Yeah. Can you repeat, please?
Am I audible?
Yeah.
Okay. So my first question is, sir, the raw material prices is very volatile. So how do you hedge that risk? That would be first.
Okay. So the raw material prices, we have annual contracts with the local suppliers, and the prices are changing almost every week locally based on the international prices. As far as international imports are concerned, the price we are charged is the average of the month of import, but it evens out in the whole year.
Okay. And with the Ecosys project, sir, are there any plans to license this technology? And how are we planning to compete with global players?
Once our plant is operational, then only people will be interested to license. So they would like to see it first, then we will see. We are open to that.
Okay. And plans to compete with Loop Industries and Reliance's recycled offerings?
See, Reliance is not doing any textile to textile. Loop Industry is doing, but I don't think they are coming with any plans of putting up a big plant. It's still in the air. I think ground reality, they have not started anything. This is what my feedback is.
Okay. Is there any help that you're getting from the government in terms of PLI and Mitra schemes?
No, nothing.
Okay. Thank you.
We are trying, but as of now, nothing.
That would be all from my end. Thank you.
Thank you. The next question is from the line of Darshika from AV FinCorp. Please go ahead.
Hi, thank you for the opportunity. My question was regarding the new plant, recycling plant that is coming up. We had earlier highlighted that our capex is expected to be to the tune of 300 crores. What is the amount that we've already spent on this?
Please speak slowly. We can't hear you. Sorry, we are not able to get you what you are asking. Can you repeat it?
Hello? Yes. So my question is around the recycling plant. We had earlier highlighted that our capex is expected to be to the tune of 300 crores for this. What is the amount that we've already spent?
So already we have spent only around 15-16 crores. We've acquired land and some construction work has started and a few advances to small suppliers. That's all.
Okay. And major capex for this is expected to be spent in this year and the next year. Would we have a split or?
Major capex will happen somewhere end of this financial year and early next financial year. Right now only building and advances would be there.
Okay. So can we get a total capex split for FY26 and FY27, sir?
We can provide you right now. I cannot give you that number offhand.
Okay.
Yeah.
That's it for me. Thank you.
Thank you. The next question is from the line of Nilesh Patil, an individual investor. Please go ahead.
Yeah, hi, sir. Good afternoon. Thanks for the opportunity. I have two questions. The first one is on margin development, margin improvement, we can say. So in the PPT, we have mentioned that the import curbs and tariffs are likely to act as a good pointer for margin improvement, but I deem it as an external factors. So I just wanted to check at the company level, what are the triggers that you see for margin improvement?
Like I said, we are working on reducing our power cost. That is one. And from time to time, product mix, we keep on changing as per the market to improve the margin.
Yeah, but in the earlier discussion, we had mentioned that we are likely to touch double-digit margin in the H2 FY26, and at present we are about 6.5%. So, bridging a 350 bips gaps, what will be the key growth? And we can say that margin levers for the same. If you can highlight the
demand supply. Main thing is demand supply.
Okay. So you mean to say higher demand will partly
demand will give us reasonable profits. No, right now our profits are such that we cannot plan to put up a new capacity. Any greenfield project will not come at these margins. The margins have to go to at least 12-13% to justify greenfield project.
Understood. Okay, thank you. And the second point, sir, I see there is a sharp increase in the other income in the recent quarter. It has grown 3x into QOQ and year-on-year.
There is some interest which we had provided that was written back. That's a major item.
Sorry, sir. Can you please come again?
Some interest provision we had made in earlier year.
Okay.
That was written back. That was some interest we paid to customs and all, so that we were not able to win the case and not need to pay. So that's what we have written back that.
Okay. Thank you. Thanks a lot, sir. That's it from my end. Thank you.
The next question is from the line of Rishi Solanki from Greencow Securities. Please go ahead.
So my question would be, do you see any strategic rationale to enter spinning technical textiles like geotextiles or B2C branded products where we can see better margins?
I didn't get you. Please, can you?
So in the whole supply chain, do you think we can enter in some other places where the margins are better? So geotextiles?
Definitely enter into other places right now. But the margins are not so good to, want us to get into those places, new territories.
Okay.
The investment to margin ratio even in those areas is not very good.
Okay. Thank you.
Thank you. The next question is from the line of Prateek Bora, an individual investor. Please go ahead.
Yeah, sir. Thank you for giving me an opportunity. So for the financial year, the working capital cycle has increased. So for what is the reason for that?
I think debtors have gone up by 1 day, and inventory also you will see maybe 1 or 2 days. So it depends on the market situation in March. That could make a slight difference. It's not a very major shift in the cycle.
Okay, so for the second question is mine, that the debt is reduced. So for the current capex, will the debt is required or not?
I've already explained what debts we will be taking.
So what will be the amount of debt will be required, and what will be the financial charges for that?
We are taking from recycle and 126 for the additional capacity in Filatex.
Okay, sir. Thank you, sir.
Thank you. The next question is from the line of Amit Vora, an individual investor. Please go ahead.
Good afternoon, and thanks for taking my question. Sorry if I am repeating something which has been spoken. Sir, you mentioned that ECB you are going to borrow. Any rationale behind that, that you are taking ECB and not taking, Indian loan?
ECBs are slightly cheaper than the Indian loan.
Would incur something on the hedging side as well. So that was the reason why I was saying.
Cheaper. Today, ECB from Europe would cost after hedging around 8% or below 8%. You can't get any below 8.8 or 9 in India.
Yeah. Sir, and you were mentioned about 30% growth in EBITDA for next 2 years. Cumulatively, that comes around 750 odd crores. So we would have enough cash flows. Sorry?
The numbers are not correct.
Sir, you mentioned 250 crore pay 30% growth on EBITDA, which comes about 330 crores, and on that another 30%, we get around 430 crores. So cumulatively, both years together,
How can
we get
it go
about...
to 700?
Sorry?
So it doesn't come to 700 in the 1 year. No, total it will be more than 700.
Yeah, I'm saying that cumulative. Exactly, sir. Cumulative, we are going to get about 750 crores.
Cumulative it will be more than 700. Yeah.
So we should be very comfortable to repay off all this borrowings as well.
Yeah, so as and when if we have these numbers achieved, we will not borrow. No, this is a line we are taking. It's not necessary to borrow.
Okay. And on the pricing side, sir, how is it moving Q4 to Q1 right now, as we are already in 1 month of Q1 FY26? How is the pricing, sir? How is it moving?
Q1 margins are good, but there was some reduction in the raw material drastic when the crude has fell from 75 to 65. So there could be some inventory loss, but overall we should be better than Q1 of last year, much better than Q1 of last year.
And even some improvement over Q4.
Yeah.
Sir, one more last question, sir, that you mentioned on the traded goods that were done in this quarter. If we hadn't done that, the margins would have been certainly better. Is that correct understanding?
Yeah. Traded goods give a very small margin. There's some commitment that we need to fulfill. That's why we are doing it.
So if we were to remove that, the EBITDA margins would have been much better. Is that the correct assumption is what I'm trying to say?
Right. Yeah. It will be much better.
All right. Thank you, sir, and all the very best.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 at this time. The next question is from the line of Sumant Kumar from Motilal Oswal. Please go ahead.
So, sir, assuming current scenario and tariff war, and India is still higher pie in the export markets in man-made based fiber products. I'm talking about products. So, sorry, in cotton products. So, do you expect man-made based fiber product export from India will increase in next say 3-4 years, and the direct benefit to all the yarn manufacturers, and what kind of support you want from the government, and what kind of support of the ecosystem you want in terms of raw material and others?
See, textile is now predominantly ruled by polyester. In last 4 years, whatever growth in textile fibers has come from polyester. So going forward, polyester demand has to increase, and if the demand for fibers increases, it is only polyester which can provide. Cotton production is going down worldwide. There is no other fiber predominantly which can take up the space. You need at least around 4.5 million tons of extra fiber every year. China, which is growing for last 25 years, has also stopped and slowed the growth in synthetic, which they were doing it. Now, India being number 2, although we are very small compared to them, they are like 72% and India would be around 9%. So the additional volume India can take whatever share they would like. The rest will go to other countries. India PTA plants are also coming. There are 2 PTA plants I already mentioned, which is the bottleneck. Third, Reliance is putting up a big PTA plant. So once the PTA is available locally, the margins will drastically improve. No? We are paying $100 more on PTA compared to China. Even if we get $50, that becomes around 4.5-5 rupees in the margin extra. Going forward, I feel polyester will do well. Definitely.
Thank you so much, sir.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank all the participants for sparing their time and joining us for our Concall, and hope to get together again after the first Q1 26. Thank you so much. Bye.
Thank you. On behalf of Filatex India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.